Hello there. Today, we're off on an adventure, not to the moon, but into the world of stock options. Don't worry about confusing jargon. We'll break it down step by step. Think of stock options as special vouchers that let you bet on a company's future, without buying loads of shares, up front. We'll cover the basics, the two main types, why people use them, and how to stay safe. Ready? Let's get started. So, what exactly is a stock option? It sounds complicated, but let's break it down in a way that's easy to understand. Imagine you pay a small fee for a special ticket. This ticket gives you the right to buy a delicious cake at a set price, let's say 20, anytime within the next month, no matter what happens to the price of cakes in the shop. You haven't actually bought the cake yet. Instead, you've bought the opportunity to buy it if you want to, but you're not forced to do so. This means you can wait and see if the cake's price goes up or down before making your decision. That's basically how stock options work, except instead of cakes, you're dealing with company shares. A stock option is a contract that gives you the right, but not the obligation, to buy or sell 100 shares of a company at a specific price, called the strike price, before a certain date. You pay a fee for this privilege, which is known as the premium. Think of it as the price of having flexibility and choice. For example, let's say Automatic Dog Walkers, Inc. is trading at $50 per share. You could buy an option contract that lets you buy 100 shares at $55 each within the next 3 months, and you pay $200 for this contract. Instead of spending thousands of dollars to buy 100 shares outright, you're only putting $200 at risk for the chance to buy those shares later if it makes sense. This makes options a powerful tool for investors who want to control more shares with less upfront money. If the share price doesn't rise above $55, or if things don't go your way, you can simply let the option expire. You're not forced to buy anything, and your only loss is the premium you paid. Your risk is limited to what you paid for the contract, so you know exactly how much you could lose from the start. Options let you participate in the potential upside of a stock without needing a huge amount of cash up front. It's a way to amplify your buying power. That's the magic of options. They give you the power of choice, not obligation. You get to decide if and when you want to act, making them a flexible and strategic tool in the world of investing. When it comes to options trading, there are two main types you'll hear about most often: calls and puts. These are the building blocks of all options strategies, and understanding them is the first step to unlocking the world of options. A call option gives you the right, but not the obligation, to buy a stock at a specific price, known as the strike price, within a certain time frame. This means you can choose to buy the stock at that set price, no matter what the market price is. You typically buy a call if you believe the stock's price will go up in the future. If you're feeling optimistic about a company, a call lets you lock in today's price and potentially profit if the stock rises. For example, imagine you buy a call on Automatic Dog Walkers at a $55 strike price. If the stock jumps to $70, you can still buy it at $55, then sell at $70, pocketing the difference as profit. This is the power of a call option. It lets you benefit from rising prices. On the flip side, a put option gives you the right, but not the obligation, to sell a stock at a set price within a certain period. This means you can sell the stock at your chosen price, even if the market price drops below it. You'd buy a put if you think the stock's price will fall. Puts are a way to profit from a decline, or to protect yourself if you already own the stock and want to guard against losses. For instance, if the stock drops to $30 and you have a put with a $45 strike, you can still sell at $45 even though the market price is much lower. This can help you limit your losses or even make a profit when prices fall. In short, calls are for betting on a rise in stock prices, while puts are for betting on a fall. They're two sides of the same coin, giving you flexibility no matter which way the market moves. Both calls and puts can be used to try to make a profit, or to protect your investments from unexpected swings in the market. They're tools for both offense and defense in your investing playbook. Just remember, call means up, put means down. It's a simple rule, but it's the foundation for understanding options trading. That's the heart of options. Mastering calls and puts opens up a world of possibilities for your financial future. Why use options at all? With so many ways to invest, you might wonder why anyone would bother with something that seems so complex. But options aren't just for Wall Street pros or financial wizards. They're tools that everyday investors can use to shape their financial future. The big draw is leverage. A small investment can control a much larger amount of stock. This means you can potentially amplify your gains without needing a huge amount of cash up front. For example, with $500, you might only be able to buy 10 shares of a company's stock, which limits your exposure to its price movements. But that same $500 could buy options contracts that give you control over 200 shares, multiplying your potential impact if the stock moves in your favor. If the stock rises, your profit from options could be much bigger than from owning shares outright. This is why options are so attractive to many investors looking for bigger returns. But options aren't just about chasing profits. They can also help you manage risk. If you own shares but worry about a drop, you can buy a put as insurance. This means if the stock falls, your put option can help offset those losses, giving you peace of mind. This is called hedging, protecting your investments from losses. It's like having an umbrella for your portfolio when the market gets stormy. Some investors use options to earn extra income by selling call options on stocks they own, turning their shares into income-generating assets. This is a strategy called covered calls. It's a way to make your stocks work harder for you, even if they're just sitting in your account. You collect a premium, like rent, for giving someone else the right to buy your shares at a set price. It's a steady way to generate extra cash flow, especially in flat or slow markets. So, options can boost your profits, protect against losses, or generate income, all with a single set of tools. They offer flexibility and creative ways to reach your financial goals. But remember, every strategy has risks. Options can be powerful, but they require careful planning and understanding. Use them wisely and they can become a valuable part of your investing toolkit. Now let's talk about mistakes to avoid. The biggest risk is time. Options expire. If your prediction doesn't come true in time, your option can become worthless. Don't risk more than you can afford to lose. Start small. Always have a plan. Know your target price, your timeline, and when you'll take profits or cut losses. Write your plan down to avoid emotional decisions. Avoid complex strategies at first. No need for iron condors or butterflies. Stick to simple calls and puts until you understand the basics. Learn from mistakes in a safe way before risking real money. Master the fundamentals before moving on. Caution and planning are your best friends. Ready to try? First, you'll need a brokerage account approved for options trading. The broker will ask about your finances and experience to ensure you understand the risks. Start with paper trading, a simulator with pretend money, to practice without risk. Learn the platform, make mistakes, and build confidence. When you're ready, start with a tiny amount of real money. Pick a company you know, do your research, and try a single call or put. The goal is to learn the process, not to get rich quick. Keep learning. Read books, watch videos, and stay curious. The market is always changing, so treat it as a long-term learning journey. Patience and steady progress are key. We've made it. Stock options are simply contracts giving you the right, but not the obligation, to buy or sell stocks at a set price for a limited time. Calls are for betting on a rise, puts for a fall. Options offer leverage, protection, and income, but come with real risks. The clock is always ticking, so start small and have a plan. Use simulators to learn before risking real money. Don't get greedy, and keep learning as you go. Once you understand the moving parts, options start to make sense. Now, after all this, I think it's time for a bit of cheese.
Dear viewers, I want to take a moment to thank each and every one of you for watching my videos and supporting my channel. Your love and encouragement mean so much to me. However, I have noticed that many of you enjoy the content but haven't subscribed yet. If you truly enjoy my videos and want to see more exciting content in future, I kindly request you to subscribe to my channel, and subscribing is completely free, but it helps me grow, create even better videos, and stay motivated to share some more amazing content with you. So if you haven't already, please hit that subscribe button and join our YouTube family today. Your support means the world to me, and together we can make this community even bigger and stronger. Thank you so much for watching, supporting, and being a part of this journey. Dear viewers, I want to take a moment to thank each and every one of you for watching my videos and supporting my channel. Your love and encouragement mean so much to me. However, I have noticed that many of you enjoy the content but haven't subscribed yet. If you truly enjoy my videos and want to see more exciting content in future, I kindly request you to subscribe to my channel, and subscribing is completely free, but it helps me grow, create even better videos, and stay motivated to share some more amazing content with you. So if you haven't already, please hit that subscribe button and join our YouTube family today. Your support means that the world to me, and together we can make this community even bigger and stronger. Thank you so much for watching, supporting, and being a part of this journey.